Good morning. This is Manu Walia from Continuum Global Asset Management on September 9th with the market commentary. I wanted to talk today about the relationship between politics and economics. Some very interesting articles I read in the Wall Street Journal over the last few weeks, and specifically what's been going on in the United States with the tax ramifications of the Bush tax laws. Some of the Democrats are thinking about extending them. Mr. Obama doesn't feel the same way. But in any event, the point I'm trying to make today is how can politics help economics? The 100% write-off that Mr. Obama is proposing for businesses who invest money in capital equipment or bring in working capital is a pretty good thing, but I believe it's a little too late because I don't believe this is really for the benefit of the economy. I believe this is a political rhetoric because Mr. Obama's ratings have gone down and he needs to do something to bring those ratings up. Now, don't get me wrong, I don't take a Democratic or a Republican point of view. I am just pro-business because if you're playing a game, the game of capitalism, you've got to have certain rules and you've got to abide by them. And I'll tell you what I mean by that. If you consider countries like China and India and their economic growth, the primary reason why they're doing so well or have been doing so well is because of cheap labor. Yes, their people are educated both in China and India and have good ethics, but on the same perspective, you cannot beat the cost factor. Now, I recently read in the journal that the CEO of Infosys, which is one of the biggest outsourcing companies in India, just gave a 14% average raise to their people last year. Think about it, a 14% raise in an economy which is growing at about 8%, but by the very fact that they're being robust or more robust than the United States and other developed countries, their currencies are going to appreciate. In other words, this is a double whammy on the negative for companies operating in those areas. Not only do they have to come up in wages to come in parity with countries like United States and regions in Europe, but also their currencies are appreciating. On the same token, United States is losing the wage benefit because we have to pay our people a lot more to maintain the standard of living. I think we have a pivotal point, which may not happen today or next year, but over the next few years, and I mean less than 5 years, I believe that this wage parity will change the game. I think the United States now has a great platform they can launch off of and start providing commodities, services, and value-added products to areas like China and India. This morning I read something about the High Court in India saying that Vodafone, that acquired Hutchinson, has to pay a certain tax to the Indian government. Now consider this, Vodafone is not an Indian company. Hutchinson is not an Indian company, but has taken a big part in an Indian company. So the Indian government believes that Vodafone owes them some taxes based on the capital gains that Hutchinson, another non-Indian company, gained. I think this is a major disincentive for companies that are operating outside of the United States to come in and, I'm sorry, outside of India to come in and start their operations in India. Going back to what I said about politics and economics, politics has a lot to do with economics. The incentives they can provide to the capitalistic society has a lot to do with the rules of the game. I would hope, whether it's a Democratic twist or a Republican twist, I would hope that politicians seriously look at the benefit of society and try to do things that are in the benefit of capitalistic approach. In other words, instead of trying to meander around existing laws and trying to come up with theories that'll help gain recognition in the public, they should go out and do things like lowering corporate taxes. I mean, there's so much money floating around in emerging countries like China, India, Brazil, Russia, and they're waiting to come to countries like the United States, which has the highest per capita income or one of the highest per capita income. And again, politics can do a lot if they could just look beyond politics and look at economics. I will go back and sound like a broken record. If an investor is really interested from or in benefiting from this phenomena where United States is going to do well over the next few years, I think one should look at companies that bring in majority or at least a significant part of their revenues from overseas. For instance, companies like McDonald's, Yum Brands, Caterpillar, Boeing, Coca-Cola, and the list goes on and on. So I would start to gravitate away from companies that are even blue chips, but only bring in revenues from the United States and move into the global arena. Once again, thank you for listening. But if you'd like to discuss this in detail or would like to get more information on our services, please contact us through our website, which is www.cgamadvisor.com. Once again, thanks for listening and happy trading.